All right. The fun begins. I'm going to be showing you guys where you need to go to get access to your own demo account. Now, in the past, we would have been trading Forex, which is normally, trading one currency against the other, and you had to do a lot more things. Where's the take profit, which is where you would go to make the money? Where's the stop loss? And a lot of things that kind of makes trading a little bit more complicated. But what we really love about the changes in the company is that they want to make it so easy for you to make money that they have started to gravitate towards another type of trading. Now, that doesn't mean that they don't have other opportunities for you to make money. You can still trade Forex and you can learn how to trade cryptocurrencies. If you guys are interested in that, you can always reach out to me otherwise. But the week that we're going to be doing is going to be focused more so on high frequency Forex. And it's really, really simple. You just want to get into a trade. And if wherever it is that you enter, price is above that place, if you entered in a buy, then you win. If wherever you entered, price is below that trade and you're in a sell, then you win, right? So the key to trading high frequency Forex is just to have the correct direction and for the end of the trade to be below or above the entry that you put in. So I'm going to make that very, very simple. I just wanted to explain that first and foremost, and then I'm going to get and show you guys exactly what that looks like. Okay, so I'm going to be sharing my screen so you can see the website that you will be going to create your own account, which you'll be taking the trades from. So if you can see right here on the screen, it's called Pocket Option, and you can see pocketoption.com, www.pocketoption.com, and you will actually be able to register your account, put in your email, password, accept their policies, and then you would sign up for your account, right? So once you click register, then you'll be able to go directly into your account. So I'm gonna log into my account because I've already created my account. You should be able to see that. And this is a demo account that I created earlier so that I can show you guys exactly what we're going to be doing. All right. Now, I don't want this to be too complicated, so I'm actually going to close one of my screens right here. And I'm going to make this look very, very simple for you to understand. Okay. All right. Now, this is what you're going to see once you log in. Some of them, once you sign up for the demo account, we'll start with 10,000, some less, right? Whichever one is fine. We just want to make sure that you understand that you would be taking these trades as if it was your real money. So the lower, the better. But if you get a higher account and it's complicated, just stick to whatever they give you as your demo account amount. Now, again, I'm going to make this extremely, extremely simple. And I'm just going to be explaining to you what you're going to be looking at, what it is that you're seeing on the screen, and how you're going to be able to enter the trades, right? So here, as you can see on the screen, you see USD JPY right here in this top left corner. These are the list of the currency pairs that you're going to be able to trade. Now, when you trade, you can trade different things. If I click this arrow right here, you can see all the different types of currency pairs. In this case, you can also trade cryptocurrencies, commodities, stocks, etc. But we will be focusing majority of our trades on the currency pairs because majority of the trades we're going to be receiving will be currency pairs. So if someone tells you to go to a particular currency pair, you're going to come right here to this box, click on the down arrow, and you're going to select the specific currency pair that you want to see the chart for, right? So we have a chart already up. USD JPY is honestly a popular currency pair. And for anyone who's never seen anything to do with trading before, this is how currencies are quoted. You have the first currency at the front, in this case, US dollar, and that represents 1 unit. So that's 1 US dollar. And the graph is going to tell you the equivalent value in Japanese yen for that 1 US dollar, right? So right here, as you can see, this line that's kind of like fluctuating up and down, this 110, 895 is telling you that this is where the currency exchange rate value is at this very moment, right? So that is all that means. And basically, the exchange rate is going to be plotted on a graph showing you the time, that the currency value was at which point. So it's high here, but it went low after that time. So you can see here at the bottom, and then time elapsed some more and it went up. Time elapsed some more and it continued up. So basically that's all you're seeing when you look at the graph, the exchange rate being plotted on the graph, right? So that's very, very simple, guys. And you've learned a lot. You've learned already, where to find the currency pairs. You've learned that currency pairs are quoted. The first currency is 1 unit, and then the second currency is shown here, the equivalent value for that second currency compared to the first currency. And then you've been taught that this actual price movement that you see on the chart represents the movement of your exchange rate over a time period, right? All right, so to go on to other things you will need to note, this particular currency pair, we are actually looking at it on a 5-minute chart. So you can quote the currency movement in different time frames, right? So we call them time frames. So you have, if I click here on it looks like candles, right? You will have 5 second, 10 second, 15 second, 30 second, all the way up to 1 hour and daily, right? You will see the same currency value being plotted on different time frames, right? So they'll look slightly different on each time frame, but basically from the top time frame to the bottom, all you are doing is drilling down and seeing what happened to that currency as you got closer to a lower time frame, right? So if I look at the daily time frame for USD JPY, you can see that it looks like it was in an overall uptrend, right? And this is each candle, because this is a candle. It looks like it has a body and a wick, so we call it a candle, but all it does again is document price movement, like a bar chart. And so each candle on a daily chart will represent 1 day of movement. So on this particular day, you can see price moved up in the market. A green candle show that it went up. A red candle will show you the next day it went down. The next day it went up. The next day it went further up, and so on and so forth, right? So that is clear. So if you drill down, just to give you a visual on that, if you drill down, that is the daily. If you come to the 1 hour, now you would have seen what that uptrend, that upward movement on the daily would have been made up of little or smaller movements up and down in the market. So just wanted to make sure that you understand the difference between the time frames and what they're showing you, okay? So the key also is that we do not take trades on any other time frame but the 5-minute or the 1-minute time frame, right? So we're not going to be in these trades for a very long time, which is also another advantage to Forex. Whereas we could be in a trade for hours into a day. Generally, we're going to be in and out of a trade between 1 minute to 15 minutes, and mostly 1 minute to 3 minutes, okay? So how are you in and out of that trade in that time frame? Now, this is just for example purposes. I'm just zooming into the price movement here. And I'm not doing any analysis, so it doesn't matter if I win or lose. I'm just showing you guys how to use this platform. So let's say I believe that price is going to continue downward. These two buttons are how I actually enter the price, the trade based on the price that is at the moment. So wherever the price is at when I click on the button is where you will be entered in the trade. So let's say I believe that price is going to continue downward. I'm going to enter in a put. Now a put just means that I believe that price is going to go down, or I believe that price is going to sell, right? So in this case, as you can see, if I zoom right in, that there's a very tiny red line showing you where I actually entered the price, right? So the red button is how you sell, and it is also called a put. The educator is going to say, enter this trade as a put, and that is what a sell is. Or the educator may say, enter this trade as a buy, which is also called a call. So just remember that put is a sell, a call is a buy, right? Now, how am I going to be taken out of the trade? So we know how I got in. I just click on the button in whichever direction I believe price is going to move in that direction, right? But how am I going to be taken out of the trade, right? So how high frequency forex works is it's actually going to expire the trade. So after whatever time you choose, it is going to close the trade, and wherever you are as a position on the chart is whether you would win or lose the trade. So in this case, I have a 3-minute expiration, which means after 3 minutes, I will no longer be in this trade, right? So you can decide to increase how many minutes you want to stay in the trade. Here you have 1 minute, 2 minute, 3 minute, 5 minute. But majority of the time, we are going to be in a trade for 1 to 3 minutes, right? So we could choose 1 minute. If the educator says get any trade for a 1 minute trade, then that's what we'll do. Or if they say get any trade for a 3 minute trade, then we'll switch this time right here instead of instead of from 3 minutes, we could switch it to 1 minute or vice versa, right? All right, so now we know the exit of the trade. We get out as long as the time has expired on our trade. So I'm in this trade, and we can see what's happening to the trade right here in open trade. So every single trade that you enter is going to be listed here to the right of the screen. Now, I can enter a trade multiple times. I could click on this button 1, 2, 3 times, or I can enter 1 time. Please try to keep your trades 1 trade at a time when you are given the opportunity to take a trade. The reason for that is if you do have a loss, you don't want that loss to be multiplied by the number of times you enter the trade. Because if you lose the trade and you've entered 5 times, instead of losing 1 trade, you will lose 5 trades, right? So we want to make sure that we're managing that, okay? So only 1 click when you're entering the trade after the idea has been given. Now, how are we aware of when the trade is going to expire? Right here to the right of the screen, you can see a countdown telling you how much longer before the trade actually closes you out, right? So you can see that this has been fluctuating up and down, and I am about to expire this trade in a second. So we actually won that trade, right? And I entered at, and I'll explain that part later, but we actually won that trade, and I won $137, and I'll explain how that is calculated a little bit later. So we won that trade, whereas I anticipated price was going to go down. I entered in a put or a sell, and price was lower than my entry point after it expired in 3 minutes. Okay, so that is basically how you will take every trade. Every trade, you'll be given a call or a put. You'll be given the price in which you need to enter the trade. When you see that price, you snap or quickly press the button, and then it will expire at the time that you already had set in your purchase time. Okay, so we went from the open screen. As you can see, there's nothing in the open screen right now because we're no longer in any trades, but all the trades that close after the expiration time will be listed here in our history of demo trades, our history of trades if it was a live account, right? Now, the only other thing I'm going to explain here to you guys, because this is basically it, and all you'll generally need to know is this is the trade amount. Now, what does a trade amount mean? You can see that for my account is gone up now, but it's gone up now from what it was before. It was 1500 and something. And how it was able to do that is, first off, I had to risk some money from my deposit. Okay, so really honestly, in terms of risk management, you want to be in a trade at least 1 to 3% of your account each trade, and that is how you manage your risk, because you're not going to win every single trade. And in the case of HFX or high frequency forex, binary options, whatever you want, whichever of the three you want to call it, you will always make a percentage of whatever you risk, which means that your risk to reward, your risk is always higher or slightly higher than your risk, right? So in this case, every single time I take a trade, I am risking, in this case, it's $77. This is not 1 to 3%. I'm not even sure how that got there, but 3% of the 16 something should be just over $30 or so. So I should have my trade amount at $30. Let's call it $32 or so. And we are going to enter the trade at that amount. What does that mean? That if I win the trade, I will win back my $32 plus a percentage of the $32, right? And if I lose, I'm going to lose the full $32, right? So that's why we keep the risk at 1 to 3% of the deposit, because if you lose 3% of your deposit, you can always make that back in the next few trades, right? When you win those trades. The key is always to have more wins than losses, and that will be the focus of this week, right? So again, when I enter the trade at $77, in this case, I basically won the trade. $77 was put back on my deposit. So it was replaced to my deposit. And then as you can see, this 80% here, right here at the side of the screen, 80% is telling me how much profit I will make on top of what I risk when I enter the trade. So as you can see, 80% is the percentage rate that they are giving you in profit if you win USD JPY at the time that you want it, okay? Because this percentage can fluctuate, but basically 80% of that $77 is what you will win in the trade. So $77 at 80%, that's $61. They gave me back my $77 and then added $61 to my deposit, and that's why I'm now at 1631, right? So the key and what's so amazing about binary options is that it's very simple. Okay, you don't need to know where price is going necessarily. You don't have to stay in the trade for a very long time. It's just very simple. You either enter in a buy or a sell, and the price is going to automatically expire on you, and that is all it is. All right. So I'm going to encourage you to watch this video more than once if you can in preparation for the webinar on Sunday, and we're doing that from 7 to 8, and that is honestly going to help you to be ahead of everything that we are trying to share, right? So that it's not too complicated, and you would have heard it not just once but multiple times, so that it is clear to you what it is that we are doing. Okay, now during the week we're going to be doing two things. We're going to be hopping on Zoom calls, and I'm going to be posting that schedule later on tonight. Just check the schedule and see what times you're going to be able to make the calls, right? If there's any call that you do not want to miss, that's the one on Sunday, because again, we will be making sure that we walk through how to set up your demo account and how to take the trades, so that there's no question, you understand everything, and you can just take the trades, right? If there are any calls that you can, make as many calls as you can, because like we said, you can have I guess you can have a few losses, or you can have a losing day, right? So it is better for you to see the full value of the trades if you are there majority of the time, okay? But I do know and understand that some people may not be able to make every single call and stuff like that, but just try to schedule time so that you can make as many as possible. So there are the Zoom calls, which will be with the educators majority of the time, right? And then we're actually going to be posting trades from the platform, from the application HFX Swipes. If you want to go up in the chat, you can see what HFX Swipes is, but basically it's just an application that sends us a notification, and we can swipe the trades as they come up, and it's going to tell us if it's a call, if it's a put, what time frame to take it, and what price to enter in at. Those three things, boom, we just copy that information into the platform like we had here, and you take the trades and let them run. And that is it. So if you can't make a call, you will still make sure that you take all of the trades that we're going to post um, in the chat related to HFX swipes. All right. So again, we're going to explain that during the webinar on Sunday, but make sure you take a few minutes to go through this so that it is second time you're hearing it and it's all clear to you. I'm super excited about this, guys, because we have educators between 80 to 90% accurate, plus we have an application that's about 87% accurate. So you will be able to see along with us the amazing value of not only the platform itself, but the actual applications that they offer you so you can make money as you are learning and on the go, right? Have a good night. See you guys on Sunday, 7 to 8. Bye, that's me.